She just said AMC stock to the moon, ladies and gentlemen. I think it's going to be a great week. That was my daughter Khaleesi's attempt at saying AMC stock to the moon. We have been working on it, and she sure as hell has the moon part down, but not quite the AMC part. But we'll take what we can get. Ladies and gentlemen, it is Saturday. We need to talk about the trend that I am seeing with AMC stock, the FOMO, the hedge fund activity, and where the money actually is to be made. And the money is to be made at times like this one. So I am very bullish on where we currently sit with AMC stock. I know a lot of people are not. That's why this is such a winning strategy, and we're going to go over exactly what I'm talking about and clear the air if you are a bit confused by the intro of this video. So stay tuned. Let's make some money. Hit the like button and subscribe to the channel for the almighty YouTube algorithm to help push this out to as many apes as possible, so we are all on the same page. And no matter who you are, if you are a trader, long-term investor for the MOAS, you will find value out of this video. I guarantee that. And not too much is actually guaranteed in the current state of the market. So let's dive straight into it. All right, guys, let's first off start with why AMC stock is so much different than other short squeeze trades and why it is almost with certainty the shorts will be forced to cover in a very explosive move. Now, what is the long-term thesis of the MOAS? We buy, we hold, we acquire more of the float. It helps to squeeze out the hedge funds. That's the overall consensus that most apes have. Now, that is right, but that is also wrong at the same time. If you are a follower of this channel, for the last 3 to 6 months, I have been religiously talking about the liquidity crunch. There has to be a liquidity crunch, just like you've seen in 08 when you got tons of short squeezes, Volkswagen to name one, Overstock to name another one, and there was countless other stocks that ran very hard without retail activity. By and large, not very many people traded stocks back during 08, 09, right? When a lot of these short squeezes were actually happening. Why were those happening? Because liquidity was restricted. Now, what does that actually mean? That means the Fed is coming in and raising interest rates. Like we already do know, the federal funds rate is projecting the next 4 to 5 rate hikes will be 50 basis point rate hikes. Every single time it goes up 50 basis points, or for those of you guys that don't know basis points, trust me, that's very normal. That's a 0.5% every single meeting. So throughout the rest of this year, you're basically pricing in 50 basis point rate hikes every single meeting. So that's 1, 2, 3, 4, 5, 6 meetings in a row. The markets are firmly pricing in 50 basis points. Now, the current rate is in between 0.25% and 0.50%. So by the end of the year, you're going to be sitting at 3.25% to 3.5%. Now, what does that exactly do? Take my scenario, for example. I have some margin. My margin debt went from 2.5% to 3%. I just got an email saying my margin debt coming on this May meeting will go up the same proportion as the Fed raising interest rates. So that's going to go up another 0.5%. That's happening to the hedge funds as well. So their margin debt becomes more expensive. What does that do for lending out stocks? What does that do? That raises cost to borrow rates. That's why you've seen a lot of stocks with increasingly high cost to borrow rates. At the same time, just any access to capital, whether they have to reach out to another hedge fund or a bank, becomes more expensive. And don't think for a second these hedge funds do not go out and reach out to hedge funds or banks or collateralize other assets that they have when they start to lose on very large positions. Don't think for a second they don't do that. So it becomes more expensive to do that. That's where, when you're really thinking to yourself, if you're a hedge fund, do I want to ride out this position when I know what retail investors can do, when the right catalyst comes in, with the right degree of FOMO comes in, when institutional investors, other hedge funds, are betting against those short hedge funds, and this is all what short hedge funds are thinking to themselves, do they want to remain in these short positions? Well, it's becoming a lot more expensive. I might lose a lot of money, so it's probably best that I get out now before the stock does go crazy, right? Basically common sense. But what did this last rally actually show us? That hedge funds are not going to cover until they are forced to cover. And the only thing that will force them to cover is liquidity drying up. the liquidity crisis. I've been talking about this for 3 to 6 months now. So this is not a new topic. If you are here, subscribe to the channel. And I do apologize for going over it so much, but everybody needs to know this. It's not about what happens to AMC stock. The stock can run from $13 to $34. People were saying, even other creators that really have no idea what they're talking about, to be fully transparent and honest here, saying shorts were covering, shorts were covering. Well, in fact, shorts did not cover. They actually added to their short positions. Like you can see from the Ortex data, short interest currently sitting at about 20.5%. Shorts did not cover. Cost to borrow rates still remaining steady. They've been up and down a lot. Utilization still at 100% and days to cover at 2.41%. Current shares that are sold short of 106.07 million. So shorts they're not going to cover until they are forced to cover. The liquidity crisis is the only thing that will force them to cover. That's really outside the box though. Not very many creators actually talk about that. And that is the main key here. It's not about just the markets crashing in general. That plays a role in the liquidity crunch, but it's not any one thing. It's really this combination of effects that is indeed coming. There's no question about that. There's no question if it's coming. It's coming, but you need to see that happen, and then you need to see the right catalyst. If the markets fall in the meantime, before you get that catalyst, liquidity, borrowing rates, everything we just went over starts to go up, cost of capital becomes more expensive, and the markets fall. That's a win-win across the board. You're already seeing the bond market is crashing. A lot of hedge funds use that 60-40 portfolio diversification. So what that means, 40% goes to bonds, 60% goes to stocks. Well, what has been happening to the bond market? Well, like I just said, bonds are getting beaten into the ground. The yield on a 10-year treasury bond. Take a look at this. Take a look at this. And it might take a second to load. Look, from May 2nd, the yield went from 1.74%. Now it's at 2.71%. That's almost a 1% increase in about 1 month. Almost exactly to the day. 1 month. And rates have went up 1% in the bond market. You know what that means? The bond prices are falling. That means hedge funds are actually selling their bonds. It's like a dividend stock. When a dividend stock falls, that yield becomes more attractive. That's exactly the best way to think about the bond market. So even on that front, hedge funds are feeling a lot of pain if they need to sell out of their bonds at the current moment. If they've been buying them over the past 2 years, which they have been, they lost a substantial amount of money on that equity. So that's really the backlog here, right? That's what everybody needs to know, that it's only a matter of time before these things actually happen. But to expect the MOAS before they happen is not really educated, right? And it's not anybody's fault. I would mostly blame it on other people, like creators that know better, that know this information, that don't want to say that because they want to hype you guys up saying the MOAS is going to happen every single week. Now, you will see legs to the MOAS. Don't get me wrong there, but you're not going to see the MOAS until these things happen. And that should be some assurance to you guys, because you already know these things are going to happen. They're literally going to happen. And my time frame has been the end of summer, fall time. That's when we are most likely, in my personal opinion, to see the MOAS. That's when liquidity will be restricted the most. That's really before we do go into this recession. Markets will likely come down in a meaningful way around that time. So that's the backstory. That's what everybody needs to know. Now, what is the strategy here? That's what you guys want to hear about. And you know, I didn't want to bore you guys with the reason why this is such an effective strategy and the backlog there, but you needed to know it to understand the strategy. So think about the history of AMC stock. Where was all of the money actually made? Where was it made? Well, here's the key. It was made when people didn't care about the stock. They were not FOMOing in. They thought this thing was a falling knife. Kind of like you see right now. You even have other creators that are saying to buy puts on AMC stock. For one, that is a terrible idea. We're going to make a video about that over this weekend. Terrible idea unless it's a day trade. By all means, make money where money is to be made, but one day you will wake up with another catalyst and AMC stock will be up 20% a day and your puts will get clapped. Like I said, topic for another video. But what about back here before this 2021 initial rally in January, February, right? Nobody liked AMC stock. No, you couldn't even hardly pay people to buy AMC stock. The thing was at its all-time lows at $1.91. Then what happened? People started to care again. They started to FOMO in. The stock ran up to $20 per share. Then what happened? People also didn't care as much, right? They got pumped out on a couple rallies, faked out. People didn't care as much. All of a sudden, everybody cares, and everybody's talking about AMC. Boom, the stock goes crazy. What about during all of this time? During moments right here, right? Let's just call it July and August. Nobody really cared about the stock again. They thought this thing was just going to keep going down. It was down 50% from its highs. And it was trading around 20, $5, $26, $27, $28. Then what happened? People slightly started to care about the stock a little more. It ran up 100%. And now really over time here, you've seen less people actually caring about the stock. The stock hit $12.90 per share, ran up almost 200% because people started to care again. And I don't think it's actually people that are long-term investors in the MOAS, right? There's a difference. This is a long-term trade. There's long-term investing. We could talk about that in another video if you guys want to. We're talking about the trade here. Long-term investors that are buying this for the MOAS have been holding. That's not a question. I don't have that question in my mind. I think that community, the amount of shares we own, has continuously climbed, but it's really the traders that are in focus here in this video. The guys that come in and FOMO once activity does start. The FOMO guys, the retail FOMO guys, as well as the hedge funds, they operate in the same mind frame. Let's play the trend. Let's play the uptrend. Let's make this money here in the short term. And that's why you see moves like we see right here without shorts covering virtually any shares. The short interest literally went up. It went up. And people were saying it was going to go down. This was the end of the stock. Well, the stock went straight up virtually. Almost every single day was green for a very long time. Now the stock is going straight down and people are starting to care less and less about AMC stock. And what has the trend showed us? You buy when people do not care. Now, this does not work for any and all stocks. Let me be clear about that. If a stock does not have a business behind it, if all it has is retail hype, very bad strategy to do. Very, very bad strategy to do. Do not do that. You will lose a lot of money. But with AMC stock, what's actually going on behind the surface? Well, the business is getting better. AMC has shut down its most money losing locations. They were forced to because of COVID. So what? They're innovating with crypto, a popcorn business, getting new movie deals, right? Expanding in various different ways to grow their business, investing in other companies, literally diversifying their portfolio. And we know more catalysts like that are on the way. And the markets, it's funny how it works. If a stock has 4 good earnings, the markets will project that stock to have another good earnings report, right? Well, when AMC just made a great investment, the markets are going to look at, hey, the next one's probably going to be good. So once that comes out, the stock's going to rally off of that. It's going to rally very hard. And that could happen on Monday, Tuesday, Wednesday, Thursday, Friday, or it could happen next month. Who knows? But it is going to happen. And that FOMO crowd will come back into the stock. The hedge funds will come back into the stock. And there should be no question in anyone's mind, even about the hedge funds that are trying to trade AMC. In the past week, really when this rally had happened, we've seen about $1 billion of option activity on AMC stock from institutional investors only. Just them, not even including retail. So it's obviously much higher than that. We're talking institutions here. That is about the same amount, the same dollar amount of option activity that a stock like Microsoft will see in a week. Now, this is only going to increase as you do see more FOMO buyers head in. As the stock does become more attractive on a fundamental basis, you're going to see more violent rallies like this. And what do we know? Even though inflation is high, even though cost of capital is going up, it doesn't take a lot of capital to go to a movie theater and see a movie that comes out. Great movies are starting to hit theaters. People are going to go. That is a fact here. AMC as a business is probably going to post its best year ever. Its best year in their business history. We've talked about it many times. A stock like Cinemark produced 6% profit margins. AMC in the same year produced 2% profit margins. AMC, if they can boost that number up, we can start talking about dividends, investing in more companies, and an overall higher earnings multiple to go off of and to value the company. And that, mixed with everything else we have talked about here in this video, will cause the MOAS, in my personal opinion. Obviously, for legal concerns, I can't sit here and say that part is guaranteed. But it's virtually guaranteed that you will make money in AMC stock doing this strategy, because that is what it has showed us. Now, obviously, do not invest anything you cannot afford to lose, especially when it comes to options. Those 83% of the time do lose money, but this is something that I have noticed, and I do plan to buy a lot of AMC stock next week, as well as I will be purchasing some options. And take this into perspective. I like to talk about this on the live stream. I've talked about it, I believe, the last couple of days to really put it in people's perspective. But if you could go back to here, when the stock hit $12.90 per share, wouldn't you have put a lot more money into AMC? Right? Wouldn't you? If you knew what was going to happen in the next 2 weeks, stock was going to run up to $30, $35 per share? Yes, you would have. So I look at that as the same opportunity. Now, like I've said many times, stocks don't always just go up and they don't always just go down. There will be a bounce. How aggressive will the bounce be? What catalyst will we see? That's the real question. So leave your comments, questions, or concerns down below in the comment section. I hope you guys found value out of this video. That is the strategy. Buy when nobody cares, because they will care. The stock was searched more than the word stimulus check in 2021. This thing is not over until the shorts are forced to cover, and eventually they will be. It's getting better and better by the day. Nonetheless, hit the like button and subscribe to the channel. I think every single ape needs to hear this video. I know it's pretty long, so thank you guys for watching to the end. Hope you guys found value out of it. If you guys want to come trade with us live in real time every single day from 9:30 in the morning until 4 o'clock in the afternoon, check out the link down below in the pinned comment. We do it all over there. If you have no option experience or trading experience, we'd love to have you. If you are more experienced in options or trading experiences, come join us. We would also love to have you. Thank you guys for watching, and I will see you in the next one.